Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Honestly, I love talking with everyone in the comments and the community tab. So if you're new to the channel, please make sure you smash the subscribe button down there. Turn on that little bell notification as well, because I love doing these videos on a daily basis, documenting my journey with investing, with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come on, this incredible journey. We're just getting started. Also, if you can give this video a thumbs up, watch it straight through, would really help me push the channel out to a lot more people, as the YouTube algorithm is absolute magic when you do that. All right, let's get straight into it. Little disclaimer, I am not a financial advisor. Please do your own research and due diligence with this stuff, especially with any kind of investing. I do not want to see anyone get financially hurt. And my number one golden rule is I only invest what I can afford to lose. Yes, we don't like to lose, but you can lose money like that, especially in the stock market, which is what today's topic is going to be about. All right, let's get straight into it. Now, obviously, I am a dividend stock investor. I invest in dividend-paying stocks, and I have been doing so since mid-2019. It's been incredible so far, and here you can see my portfolio. I use the app Stake here in Australia. I have been using it since they launched. It's been incredible. There is a referral link below. Please feel free to use that. You can get a stock in Dropbox, GoPro, or Nike. And I can safely say I've got a significant amount of stocks in GoPro. So thank you very much. All right. Now, let's have a look at my portfolio and go over the stocks that I'm really eyeing off right now, because I think they're going to be absolutely critical in the next couple of months, and if not years, because I think this space is going to be, absolutely parabolic very soon. Now, my portfolio value is at $35,382.50 USD. And I have been significantly investing into cryptocurrencies as well. Again, I am still dollar cost averaging into my stock portfolio, allowing at least 10% to 20% of my, my wage to go into my stock portfolio. That is a given. It doesn't matter what happens. I dedicate a certain amount of money every week to this portfolio, buying my stocks. Now, on the day on Friday, I had a negative return of $453 USD. That is a lot of money, considering it's, US dollars. Australian dollars, we lose literally 20 to 25% to the US dollar. So it's a lot of money for us here Aussies. Okay, and now basically looking at my portfolio and the total returns, I've had a total return of 22.53%, which is fantastic. $6,506.57 USD. That is a lot of money for some people and myself. I mean, it's a lot of money to get a return. So it's incredible to see that. Very, very different to crypto, sorry. So just bear that in mind. All right. Now, obviously, let's go over the stocks that I'm eyeing off right now. And that is the electronic vehicles sector right now. EV, batteries, electronic cars, Tesla, Ford, NIO. All these companies are seriously going to start benefiting from what's happening from, the rising fuel prices due to inflation right now. It's ridiculous. You go to, in Australia today, petrol prices are literally over $2 a litre for fuel, which is ridiculous. It is continuing to go higher and higher and higher, to the point where I think we are going to see people literally riding more bikes. I know in Melbourne, I don't know if for those of you in Australia or in Melbourne, we have these, they've just put scooters, electronic scooters all over the CBD, the city. So you see people riding scooters everywhere right now. It's crazy because fuel prices are so high. I don't know how families and people in general can afford to fill their cars up, considering, it takes, and the average car would take, 60 litres of fuel. It would cost you like nearly $200 to fill up your car. If you have a four-wheel drive or an SUV, wow, that is going to cost you a lot of money a week. Now, some people out there might be able to afford it. Some people won't be able to afford it, and it's devastating. So again, I think the electronic vehicles sector is going to be ridiculous in the next few months, if not few years, if this continues with inflation. I hope it doesn't. But again, Ford is definitely one that I'm considering. They are building a significant part of their business to move to electronic vehicles. They are doing that. They have released new SUVs. They've released an a battery powered Mustang, which is incredible. And you know, I think this is incredibly undervalued right now. It's $16 US. I am starting to buy into this. I've got 4.7 shares of Ford. I wish I had bought this though during the 2020 crash, obviously because of the situation. The price had literally crashed dramatically at $5. It has had a total return since then of 90%. That is literally getting all of your money back. Like, had you invested $1,000, you would have made $1,000 on your money. That's incredible. It's nearly 100% return. That is crazy. To see Ford now at $16, I think this is an incredible buying opportunity. Now, they have a dividend yield of 2.45%. That is incredible. They did suspend that dividend back when that crash happened in 2020. Obviously, that deterred me from investing into it, but I should have invested into it because they restarted their paying their shareholders a dividend of 2.45%. And that is paid out quarterly. So again, I love Ford. I'm definitely going to be buying more Ford, of course. And because, more importantly, it pays dividends, which is nice. So why would you want to buy a stock if it doesn't pay dividends? Now, for the growth perspective, I'm going to show you some other stocks that I'm holding at the moment. So if I scroll down to NEO, I bought NEO very, very early. Obviously, I'm down a lot to 9% in the last day. So trading day, sorry. So it's $16 a share. My average buy price is $16. So I'm virtually down 2% because I literally started buying at 16.44. It's now 16.07. Now, NEO is the Chinese competitor to Tesla. So, you know, I mean, it's not going to be as a monster as Tesla, but, you know, NEO is an incredible car company as well, electronic vehicles. They also have, you know, cars racing in the electronic Formula One. So, you know, it's pretty incredible, the cars they have, and really sporty stuff as well. But again, now, if you go in the last 3 years, it has had a return of 179%, which is crazy. So again, I think NEO, and that, look, this is a growth stock as well. I am invested in a few growth stocks. NEO, I think, is going to be an absolute monster of a company, considering the fact, again, rising fuel prices. So just putting it out there, NEO's at $16. And the everyone's favorite, of course, is Tesla. And I did buy Tesla just after they did a stock split because the stock price was at around $2,000 for a share of Tesla. So again, I bought when the stock split happened, and my average buy price was $466. So I am up 70% on my investment. Tesla is not a dividend paying company, but they are a growth stock, and it's been incredible. I've made $1,335 on my money. If you go to the last 3 years, that is just ridiculous. 1,343% return in the last 3 years. You will never find that anywhere else. So again, Tesla for me is still undervalued right now. I think this is a massive company that is going to be benefiting as well from the rising fuel prices. Just putting it out there. Now, back to my dividend stocks. Obviously, my best performing one is actually ExxonMobil. And this is obviously given the fact that rising oil prices, all the oil companies are absolutely benefiting from this, which is crazy. So I've had a day return of, in the last week, 3.69%, 7.59% on the month. If I go to the last year, 37%, which is crazy. And if I go to 3 years, 5.94%. This does pay a dividend of 4.12%. I did receive a dividend payment on Friday, which is really nice. It was my biggest dividend payment yet. $70 USD, which equated to about 100 Australian dollars. So I used that money to buy another share back on Friday night when I got that dividend payment. I did buy another share of ExxonMobil, well, just under it. So the beauty about dividend investing is the fact that you're consistently getting paid to hold that stock. And basically, I would love to get all my stocks that I have in this portfolio up to a point where they can literally get paid a dividend and buy 1 to 2 shares at a time. This is happening right now, which is really nice. So again, ExxonMobil, sorry, I forgot to show you guys here. ExxonMobil pays a dividend of 4.12%. This pays out every quarter. Now, the other one I'm looking at, obviously, is EPD, which is Enterprise Products Partners. They are a midstream company. And again, I get paid dividends, and the dividends alone from this company actually allow me to buy more shares, which it just compounds, which is incredible. They have a dividend yield of 7.28% right now, and I think they're undervalued. Now, in the last week, it is down. Month, let's have a look. It's up 3.36%. In the last year, it's had a 7.55%, which is normal, standard. In 3 years, it's down 10%. But again, I'm up 10% on my money. I hold 69 shares of EPD. Quarterly dividend payout. So the dividends are quite high. A little bit risky, guys, but it is a midstream company. So again, they handle a lot of transportation of gas and so forth. So they are the middleman, basically. Some other companies here, guys, obviously that I'm definitely adding more of is SPHD, is an ETF. It pays out every single month. I love that passive income coming in every single month. I now hold 105 shares of SPHD. I've had a total return of 14% on my money, $589. It has a dividend yield of 3.14%, which is really nice as well. If you go to the last year, it has had a 5.98% return, 3 years, 6.22%. Beautiful rise there. And again, this pays out every single month. So again, I can expect dividends every single month. Getting it to that point now, the share price has gone up to $45. My average buying was $39. Obviously, I've been dollar cost averaging into it. But again, I'd love to get it to the point now where I can get those dividends and just simply buy 1 or 2 shares at a time every single month. So that just compounds very, very quick. And again, it's really nice to get those monthly dividends. Now, some other ones here I'm looking at obviously are Intel. Now, Intel is one for me, is very undervalued at $45 right now. It has a dividend yield of 3.13%. And I think Intel is going to be big in the crypto space because they are releasing significant mining chips for Bitcoin ASIC miners. They're getting, opening up new plants or manufacturing factories in Columbus, Ohio, in the United States. Again, undervalued. It is one of the very few tech companies that pay a dividend yield of 3.13%, which is very high. So again, Intel is definitely one I'm looking at. Now, if I go to my dividends received, just recently on the 11th of March, I got paid from CVX of 49 cents, EMR of 9 cents, IBM paid me 16 cents, Target TGT paid me 8 cents, and again, ExxonMobil paid me a dividend of $90, which is about $120. Because I'm not a US citizen, I do get taxed. Yes, it's inevitable. You do get taxed. And I got taxed $13.55. But again, I reinvested all that money straight back into ExxonMobil, $79. So pretty incredible stuff. Now I'm going to go to my dividend tracking app. I'm not affiliated with this app at all. I use it because it's much cheaper and better on your phone as opposed to using Simply Safe Dividends, which is a website that charges you around 600 Australian dollars a year to get that information. It is an incredible website. I wish they did a monthly subscription because I would be using it, but I found this alternative. This is called of Div Tracker. It is in Apple iOS store. I'm not sure if it's available on iOS. Really great app. So my annual dividend income is $1,733. Daily is $4.75. That's basically a latte here in Australia. I'm due to receive a dividend from 3M of 69 cents. My top payers are ExxonMobil 500, SPHD 224, EPD at 176. I have a goal of $100,000. Basically, if my cryptos take off, I will put the money into my stock portfolio and get that passive income, or I may use part of that stuff from cryptos and I may stake it and earn that passive income through cryptos. So there's always ways to generate passive income right now, even with a little bit of money, which is fantastic. And again, I started with nothing in this portfolio, just putting it out there. It's taken me a long time to get to this point. Here's the value in Australian dollars, $48,425.72. $8,422, 21% return in Australian dollars, which is really nice. My favorite part of this is going straight down to this chart, which is really cool. 10 years, if I didn't invest any more of my money, it would simply compound over time, me reinvesting the dividends. I don't take anything out of this portfolio. I simply just reinvest all the time. In 10 years, the portfolio is going to be worth $82,000, $5,352 a year in passive income. Now, if I go straight to 20 years, the portfolio is going to be worth $239,000. It will generate me $26,000 a year in passive income. That's literally about $300 to $400 a week. This grows over time. The more you reinvest, the more it grows. That's the beautiful thing about compound interest. One of the wonders of the world, straight up. Here's my dividend income for the months. Obviously, my low months are still January. You've got April, July, which is low, and October. And again, I'm wanting to build these up, which means I will need to invest more in Coca-Cola, GPC, Nike, IMO, EMN. Kimberly-Clark is a great dividend payer. VU, Iron Mountain, VCLT, TLT, AGNC, MO's Altria Group, you know, tobacco and wines and stuff like that, Philip Morris, VTR, PBA, WPC, PEB, Ben, Main, EPR, blah, blah, blah. You can see it there. And again, I get paid dividends from O Realty because it is a REIT that pays out every month, $11 Australian. If I go straight to SPHD, it pays me $19 Australian, basically, which is really nice. So that's pretty much it for my dividend stock portfolio. It's an incredible way to invest and get passive income. I mean, you can use other brokers. I use Stake. It's been incredible and reliable, and the team is great as well. So let me know in the comments, are you dividend investing? Any questions or comments? Let's talk about it. All right. Stay safe. Have a good weekend. I will put another crypto video up as well. Stay safe. Peace. Bye.